tax deeds, sorting the list. I decided to create a short video with my process of how I sort the list of properties when I go to an auction, to a tax sale. This process is important because it will save a lot of time for you while eliminating properties that you are no longer interested in pursuing. And it could be you could be looking at the price, you could be looking at the location, you could be looking at the size. There are many things that you can look at. So when you get a list from the county, XYZ county, it could be any state, any county. Let's say you get a list and you have 500 properties on that list. There's no way you can go through each of those properties one by one. So what you want to do, you want to start sorting those properties out by, by a couple of things such as price. You may look at the price. So if you have, for example, $200,000 that you can work with, dedicated to investment, you're not going to be looking at $700,000 property, right? And there are, sounds like my daughter. And there are a couple other things. So price is one, and location, obviously. Even though it's one county, there may be a situation where one area of the county is better, and there is one that you don't really want to own any properties in that part of the county. So that would be eliminating that list by the zip code, for example. So I'm gonna add a short video. I'll show you my process, how I do it. Hopefully that will help. Okay, so this is original document, the list of properties that went to sale on August 1st, 2017. This is just one out of many pages since there are over 160 properties on the list. So this is how it looks initially when you download it off of the internet from the county's website, or you can go to the county and get the list yourself. Once I received the list, first thing I did is import that into an Excel spreadsheet, and it looks something like this. Again, we have a total of 160 properties, and there are single-family homes, row land, commercial properties. So you have different type of properties. So next thing I did is identify, what the property is, and I have pre-selected the single-family homes only. Out of 160 properties, we are now suddenly down to, let me see, 46. So we have 46 single-family homes that went to sell on that particular day. Again, I'm not interested in row land, commercial properties, condominium, or single-family homes is the only thing I was concentrating on. It gives us the most important information. And once I've pre-selected, then my job was to figure out the maximum bid, the average fair market value, which is right here. Remember, fair market value is different. This is the fair market value. Well, it's not on that list, but normally the county they suggest what the fair market value of the property is. That number is never accurate. So this is the fair market value that I have determined on those properties. Okay, this is cry out bid is the opening bid. We go further out, we will see what my maximum bid would be, and that would be right here. So that's a maximum bid. So when I go to the auction, I already know that it is a single family home. I already inspected the property. I know what the cry out bid is, or maximum bid. This is the back taxes. So this particular property, for example, they owe $2,433.99. We know if there is a mortgage on the property, we can kind of estimate as what that mortgage would be. We know if there are any liens. You have to be careful about the liens. Those liens are being inherited with the property, so it does not stay with the person, it stays with the property. So whoever new owner of the property is, that person becomes responsible for any liens, and it could be a mechanic lien in the amount of $15,000 when there was a contractor involved, or it could be an IRS lien in the amount of $80,000, which you may become responsible for. So this is extremely important not to overlook. Any mortgage on the properties, they're automatically you're not responsible for paying the mortgage. But in most cases, I think in every single case actually. But liens, that's something that you will become responsible. So during your research, you absolutely want to make sure there is no lien on the property. For example, if you ended up purchasing a property at a deed sale and there is an IRS lien in the amount of $80,000, technically you are responsible for paying it. So in a case like that, you want to contact the IRS. It's all public record. You would want to contact the IRS, find out the exact amount. What often happens is the numbers that are recorded are no longer accurate. So instead of $80,000, it could be $15,000, or it could be that it has been paid off a long time ago. So again, you always have to contact whoever put the lien on the property, find out what the deal is, and in many cases you can also negotiate. So if there is a $80,000 lien, just tell the IRS, hey, I'm planning to purchase this property, it's going to a tax sale, and they might be able to give you a break, maybe pay half of it or 20% or whatever, but always try to negotiate that. Principal residence, so we know if the person that lives there, if it's his primary residence. If the answer is no, that would be the best scenario, because that's a higher probability that property will not be redeemed. Usually when people live in a property and it's a primary residence, you would want to expect that property will be redeemed. That's not always the case. You're kind of gonna gain that experience as you go. That's a high bid. This is maximum bid that I would be willing to pay for that property. Again, I did not bid on every single property on this list, but I do kind of have a starting point of a maximum bid that I would be willing to pay for that particular property. And so that would be the profit if I would ended up purchasing the property at this number. Chances are that the minimum I would make this amount of money. In reality, it's much higher because I'm always conservative. This will show me if the property would be redeemed. That's 20%, assuming it's 20%, if it redeems within a year. And again, it could be the property may redeem in a week. So if the property will redeem 1 week after an auction, you will get 20%. If the property will redeem in 10 months, it's 20%. So regardless when it's going to redeem within that year, you are automatically collecting a 20% return that is guaranteed by the county. Let's see what else we have. That's pretty much it. I do have a probability calculations here, but I'm not gonna go into that. All right, I hope that helped. Let me know if you have any questions or comments. Thank you guys.